What's up everybody? Welcome to the Stocks channel. My name is Cory and today we're going to take a look at all of the big tech companies that make up the acronym FATMANG after they reported their earnings report and see how they could be driving the stock market to lower prices or potentially see a bounce. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we can see that SPY is currently heading down to retest that low around 410, and if we do break below that low, we're very likely going for a quick trip to fill the gap at 400 and or hit our price target right around 390 to 393. So capitulation is a real possibility if we break below these lows, as short sellers step in and long positions are forced liquidated as their stop losses are triggered. So there is a real possibility of a full-blown capitulation below this support. But there's also still going to be the possibility this is a very strong support, and just like last time, we could see a very impulsive bounce off of this support level. The question is going to be whether or not buyers step in at support, or if we see another buyer strike as short sellers take over and the bears raid the market, as nobody is willing to buy until we get to these lower prices or possibly even lower. So there is the real possibility of capitulation right around the corner, and that's why it's going to be very important for us to look at those big tech companies that make up the acronym FATMANG, because they have reported earnings and we can now look at their price action and see if we can find any clues of whether or not they're near strong support or whether or not they're also breaking down and forming new lows. So we'll go in the order of the acronym, which is FATMANG, so we will start out with Facebook. So on Facebook, we can see that we did get a very nice strong bounce after earnings because there was a lot of bad news already priced into this stock, and I guess the bad news wasn't as bad as everybody expected. So we did see a very impulsive bounce off of this low right around 173, and we did come all the way back up to resistance at 211. However, the resistance level at 211 so far is rejecting price action, which means we still do have a lower high, which means we still do have a bear trend and a weak market. So from here, unless Facebook can start closing back above 211, it's more than likely just forming a lower high before it forms another lower low. And remember, we do have a valid price target down there at 160. So Facebook below 211 is very likely trying to get down to 160, which will put more downward pressure on the market. However, if we start breaking above 211 and can break above this previous high at 217, we're more than likely going to start trending up to fill the gap around 230 and possibly retest resistance around 235. So Facebook will be looking more bullish above 211, but so far below 211, it's more than likely we're coming back down to retest support at 186, retest the lows at 174 if we break below that level, and then hit our price target at 160. So this is a downtrend until it gets the bullish breakout, and so far we're seeing rejection at resistance, and we still do have a very strong downtrend. And as you can tell, Facebook has been in a bear market ever since it reported its last earnings and dropped a significant amount overnight. So this is clearly a bear market for Facebook. So next up, we'll take a look at Apple stock, which is the next stock in the acronym. So on Apple stock, remember we did have that confirmed double top and we did get rejected at that resistance around 171, and we did hit the price target for the confirmed double top at 156.5, and then we did start to bounce and came all the way back up to retest resistance around the 50 EMA, which was right around that level at 166. And as you can tell, there was a strong rejection at that resistance, which is an extremely bearish price action move. And we're coming all the way back down to retest the support at 156. So zooming in here, you can clearly see that was a lower high rejection. And if we break below 156, we'll be forming another lower low, which means we're more than likely retesting the previous low at 150. The other bad news for Apple stock is that it's only a day or two away from having the confirmed bear trend, and it's clearly seeing a strong rejection at resistance. So with the bear trend and lower highs and lower lows, bears will continue to raid Apple stock, and Apple stock is one of the strongest market moving stocks that's out there. So if Apple breaks below this low at 156, that is going to add to the capitulation where we'll see SPY break down through support and get down there to fill that gap at 400 and possibly hit the price target at 393. So Apple breaking below 156 is a very strong sell signal all the way down to 150, or a bullish breakout would be a breakout back above 166 to 168. You cannot get bullish on Apple stock until it starts getting a bullish breakout because it's in such a strong downtrend, and you don't want to try to catch a falling knife on this stock. Now, if we get down to support at 156 and we start to bounce yet again, we do have the possibility of a double bottom, but we'll need to break this neckline around 163 to 164. So wait for bullish confirmation before you get bullish on something in a downtrend. Next up in FATMANG, we do have Tesla stock, which makes up the T, and we can see Tesla is also looking bearish. Tesla is bearish below 900, so this is a sell signal until Tesla can get back over this level. And the longer we stay below 900, the more likely we're going to get the confirmed bear trend. So with Tesla, we were hanging around this trading range between about 856 and 900, and we continue to get rejected above 900, which is a bearish price action signal, and this is starting to look a lot like a bear flag. We had that huge sell-off from 1000 all the way down below 900, and we've been bear flagging below 900 ever since, and we are getting volatile whipsaws in either direction, but price action continues to confirm the downtrend with the closing prices below 900. If we start closing above 900, that will be more bullish, but we still need to break back above 937 and get back above 975. Above 975 will very likely lose the bear trend, but we can't get bullish until we start breaking above some of this resistance above, and right now it looks like we could be trending back down to retest the lows at 760. So below 900, you're looking for a failure of support levels around 856 and 828, and if we lose support at 828, we'll very likely see a quick flush down to the lows in the 760s, and at this point, I would already be considering the possibility that Tesla is in a bear market and we're about to retest those lows until we can break back above 900. So be extremely cautious on Tesla stock while it's below 900 because it could be coming all the way back down to about 800 to 760. You're more bullish above 937 and 975 and not any sooner than that because as you know with bear trends and bear markets, you never know how low they can go. So this is still looking like a very risk-off chart. Next up will be Microsoft stock, and we can see that Microsoft so far is also getting rejected from this resistance zone right around 289, and this is clearly still in a bear trend. To get the bullish breakout, we needed to start closing back above 294 and close this gap at 296, but so far we can't even get back up to retest that resistance because we're still struggling around 289. We're getting rejected below a negatively sloping 20 simple moving average, and we do have the confirmed bear trend, and as you can tell from this price action, this is a very bearish candle taking out the last 2 days of the bounce and only one swift motion to the downside. Now we can't say that Microsoft is in the confirmed bear market until we break below the low at 270, but with the confirmed bear trend and getting rejected from resistance, it looks like that is a highly likely possible scenario that we will come down and make new lows. So below 270, we'll be going down for lower lows and we'll likely ride down this trend line, which means we could be heading back down into the 260s and possibly lower. And like I said, with bear markets, you never know how low they can go, so you want to wait for bullish price action confirmation. At this point, you really shouldn't be getting bullish until we can break above the 290s. And right now, we're getting rejected around the 280s, so you still need to be very risk off in Microsoft stock. We're coming down to support around 276 and 270, and below 270, we'll likely see the selling pick up as we continue to head to lower prices. If we can start closing above 289 and close the gap at 296, we will be getting a lot more bullish, but we still have resistance right around 300 and our resistance trend line around 305. And if we break that, you'll likely see the gap fill at 310 as we start to develop a bull trend. You shouldn't be getting bullish until you see a confirmed bullish price action breakout because this isn't a strong downtrend. Next up will be Amazon stock, and we see Amazon had a horrible earnings report and absolutely tanked after earnings, going down a whopping 14% in just one day, and we are way oversold on this stock. This is a sign of very motivated selling when you see price action going this low and getting this oversold, which means everybody is just running for the door and nobody is willing to buy. And this is exactly what you expect to see in a bear market. So when you have big giant tech names like Amazon tanking 14% in just one day, you can more than likely assume that the bear market is already upon us. And a lot of these other stocks like Apple and Microsoft might be the next stocks to start dropping this much. Selling usually starts in a few stocks and then starts taking over the market as a whole as we see that full-blown capitulation. So even though we're seeing stocks like Amazon and Facebook reaching capitulation, I still don't think we've seen it in stocks like Apple and Microsoft. Now I do have the confirmed price target down here at 23.26, so it does look like we will be trending towards that level, but we do have a huge gap to fill to the upside right around 2,800, and we haven't yet retested the breakdown at 27.20. Below 27.20 is without a doubt a bear market, and you don't need to know that at this point because we broke right through it just through an earnings gap down. But at this point, it is possible we come back up, retest that level, get rejected to confirm the bear market, and then start trending down to that price target at 23.26. So just because we start bouncing to the 2700s doesn't mean it's getting bullish, because you shouldn't be getting bullish on Amazon stock until it starts getting back above $3,000, and it is a long ways away from doing so. So you do have resistance right around 27.20 and 27.76, and above that you have resistance right around 28.89. And then of course you're getting a lot more bullish if it can start closing above 3,000. So continue to expect the downtrend in the price action until we at least hit that price target. And if we break below 23.26, you are looking for a major dump as we continue to head lower to new lows. And if we start breaking below 23.26, just remember, don't try to catch a falling knife because you never know how low stocks like this can go once the bearish momentum picks up. This is a very strong bear market in Amazon stock, so continue to be risk off until we can close above 3,000, or just play the oversold dead cat bounces and make sure you lock in those profits quickly. On Nvidia stock, we were down 6.24% on Friday, and we clearly see Nvidia continuing into the bear market. Remember that Nvidia is in a bear market while it's below 210, but we haven't yet retested that level as resistance ever since we broke down through that level. So I do still think there's a possibility we find support off of one of these lower support levels, bounce up to get rejected at that resistance, and then see the final leg lower to hit that price target at 150 before earnings. Earnings is near the end of May, so it's very possible we hit 150 before earnings. So continue to expect this very strong bear trend to carry the price action lower until we start either closing above 210 or closing above 230. Above resistance at 210, you still have resistance at 223 and the gap fill at 230. And we need to be very cautious below 244, and we could start to get a lot more bullish above 230 and above 244. That's a long ways away, so stay bearish while we're below those resistance levels, and you're looking for the next possible support down here right around 179. But below 179, you're looking for a very quick trip down to 150. This is very clearly in a bear market with the strong bear trend and the very bearish price action as we just continue to sell off, and it looks like there's no end in sight to this selling. So keep in mind, everything bounces and nothing goes down forever. So even though this is a very bearish outlook and a very bearish chart, I do think a bounce to 210 is coming. It's just a matter of when, not a matter of if. And then finally, we do have Google stock, which did break down below the critical support level at 23.92, and Google stock did retest that level as resistance and did get rejected, confirming the bear market theory. So just like what I expect to see on Nvidia stock retesting the breakdown, so far we have seen Google successfully do the retest, and so far it was rejected. So my price target for Google remains at 21.95, and it looks like we should be getting there very soon. So as you can tell, a lot of these big tech companies do look like they have more downside, which means we're more than likely going to see more downside in the indices. So it doesn't look like we've reached full-blown capitulation, but it does look like it could be right around the corner, and it does look like we could be seeing it next week, or we'll likely get some type of dead cat bounce or some sort of counter trend rally and then eventually capitulate sometime later in the year. But this is very bearish looking price action for some of the biggest tech companies that move the market, and remember, these are trillion-dollar market cap companies and not just small fish in the pond. When you see the big boys start selling off and going into bear markets, it's likely we're just getting started on how low we can go. So I'm not trying to scare you. I'm hoping that this will prepare you for what's likely coming in the future and try to remain risk off until we see some type of bullish breakouts. On Google stock, we really need to start getting back over about 2,600 to say the bear market is ending, but we cannot say the bear market is ending until we see bullish price action confirmation. Trying to call a bottom is the same mistake that bears make in bull markets when they try to call a top. And now that we're likely in a bear market, you don't want to get cute trying to call bottoms because a lot of these stocks just continue to fall. Who knows where the bottom is, but we will have downside price targets, so continue to watch those levels and see how price action behaves at those levels. And if we get any confirmation of a reversal in the trend, then we can start getting more bullish, but not any sooner than that. So on Google, watch these levels around 23.92, 2,500, and 2,600. Otherwise, you're looking for the downside price target to be met at 21.95. So jumping back over the S&P 500, while we are coming into very critical support that could lead to a bounce, as you can see, a lot of these big tech companies do look like they have more downside, which means we could be seeing SPY reaching our price target at 400 and 393 as those big tech companies continue to lower prices. Nothing is guaranteed, and there's still the possibility we bounce before we go any lower. So watch price action at these levels and only trade what the price action is telling you. If you're getting lower highs and lower lows on smaller time frames, don't just be expecting a reversal. Wait until you see the higher highs and higher lows, and then you can say, okay, possibly the price action is reversing. This is a very volatile market, so you need to be very strict with your trading plan and you need to be very disciplined and patient. This is a strong downtrend until we get a bullish price action breakout, so continue to remain risk off and expect lower prices until we see some type of bullish price action. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, when the market was losing a lot of money to the downside, Bank Trade Alerts beat the market that year and had a very positive return. If you're looking for more information or want to subscribe, you can find out more information by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.